Hi, this is Elliot Waves H. I want to go ahead and do a market update. Like always, this is financial advice. Always do what's best for you. Just use this video for your education and entertainment purposes only. So the market is, I believe, getting close to a massive reversal. Underneath the hood, you're already seeing many instruments reverse. I think oil was today's major instrument that started its next leg lower. Breaking, you see, we can break this low. This is going to open us up to retest this low at 63, but more than likely go lower. And every time oil makes its capitulation move, the markets tend to crash. March 2020 and many other examples. So this is a warning sign to me that we're on borrowed time across all instruments. Just keep that in mind. And one of the other things that happened is that triple Qs gapped open again, and then they reversed and got faded here. Again, this area is area for sellers to leave the market, for longs to leave the market and sellers to enter. So I did that on open. Literally just kept really loaded up on that wick and got the reversal. So I'm building a nice position, and I'll just continue to build that for a long, I'm looking at the bigger picture down the road, right? The bigger picture down the road. I'm not looking at the short-term noise. It's not a day trader's position, because we could still go a little higher in the NASDAQ for potentially one more swing because divergence got erased on the 15-minute here, as you can see. So it can make one more incremental high here and push up. But that should do it. Now, it doesn't have to. It doesn't have to do that. Again, the count could be off, or the divergences isn't, a foolproof. It's, it works most of the time, but not 100%. So we'll have to wait and see what happens. But this is way overextended. It's outside the Bollinger Bands, and the weekly is still outside, and that's not sustainable. Now, I showed you during the .com era, the weekly Bollinger Band, you could stay outside of it for weeks before you finally crash back in it. So keep that in mind. But I mean, are we really getting a NASDAQ style blow off top? Are we really going to get something like this? Now, if we look at this era, a lot of weekly candles, no weekly candle completely outside of it. They all poke through and come back in, and they kind of grind higher if you look here. But really the first full weekly close within the Bollinger Band after this kind of definitely confirms a bigger sell-off. But even that isn't a guarantee. So, but it is stretched historically. I mentioned the personality of the connector wave. I said if this is the end of the grand super cycle and this is the connector wave, this would be the last gasp of a bull market that's lasted, over 100 years. That's, hundreds of years potentially, that's coming to an end. If it already ended. So this is the last gasp. So it will have a lot of the same personality traits as some of the biggest bull markets that we've seen, like the .com and the 2017 run and the 2020 run. And I think we've had two check, right? .com run. A lot of comparisons to the .com bubble and AI right now. Check. We have the 2017 run, the relentless nature of the market just pushing higher and higher. RSIs going into levels we don't see. That was the 2017 before 2018 before Volmageddon. Check. We see in that kind of trading mentality, that kind of trader melt up one-sided. And then we also, and by the way, ironically, the Volmageddon I think was that month that there was government shutdown. But I don't remember what exactly news event triggered the sell-off, but I think it was Trump's first government shutdown and first tariff on China ended that party. Now, I do think the other thing is we're missing is the 2020 melt-up, which is I think representative of small caps going bazonk, going crazy, bonkers crazy, small caps. And we haven't seen that. We haven't seen the Russell do a crazy shoot up. But I would keep that in mind. I would keep that in mind. And as the Russell sells off, if we can get another swing down into this trend line, that would be a good potential strategic long opportunity to hedge some shorts. Right here at 169, but I would put my stop at 167. So it's a very small area to play around in my opinion. But wouldn't it be something if we come down here in 3 and rip back up where you have 3, 3, 3 and finish 2 right up here. And then you get the small cap, just keep that in mind. Or the other is you get 3 here and you've come down to 173 and rip up and get the small cap. I just want to see that. So if we look at the meme stocks and small cap, we started to see some of them pop, but you really haven't got it going crazy. Like BBAI set up at $1.88, could go through into the stratosphere potentially to $10. Keep this, watch this. This is a massive setup opportunity in an AI stock that hasn't contributed, because technically it hasn't reached the target area. I'm not saying take the trade. I may not take the trade. I may take the trade. I don't know. But look, it's an opportunity. So that's a meme stock, right? So these meme stocks, I don't know. Let's see, how's AMC looking? Not looking good. But what if you get, a spike up? What if this is 3, 3, and 3, and you get up to $11? I'll keep an eye on the meme stocks, and then I think this connector has met all the sentiment criteria for the final connector in the grand super cycle of a massive stock market crash. But it doesn't have to do that, but just something to keep an eye on later. But right now, the market, I believe, wants to go lower. It will struggle. If semiconductors were leading it, semiconductors are at risk. Because if you go to I showed this on one of my videos, SOXL, and there's my target to the penny, guys. Well, maybe I was a couple pennies off. 24.80. My target was 24.78. So I missed it by 2 cents and a massive reversal. So this type of rejection on a 3-wave target like I have is a huge bearish indicator for this one. The semiconductors could be done. It could be never. That's it. It's a connector wave for this first wave down, and now it goes down and breaks 6 and goes lower and reverse splits. It doesn't have to come back up now. Now it could consolidate and make a 5th wave, and if it does that, then it's the bottom's in, but we don't know that yet. So SOXS, if you look again, 1, 2, 3, 4, 5, it should be retracing this whole move soon. So that's telling me the market's I think, is ready to go down from that point of view. So let's just go through what I'm seeing. So the Dow Jones got rejected like I expected it to here, although it tried to fight, right? But it got rejected, and then of course people just can't help themselves, so it pumped. That looks like another 3 down. So it's a 3 down. So I'm not going to label it. It could be a lot of things, but I do think it's starting its journey lower. Some people think this is like going to be an impulse. I think it's yet to be seen. I think with energy breaking down, we may see this entire leg come back and retest the March low here. Um, so we'll see, and then you get a nice healthy balance for the rest of the summer. So we'll see. Then SPY, I've changed my labeling on SPY because there's just so many divergences, so many on almost every time frame, and so I'm just labeling what's in front of me here, and I'm going to label this as a W, 3 waves, and an A, B, C, and then of course B wave is A, B, C. Here's your A, so your C is in 5, an end in diagonal, 3 connector, 3, 3, and you get the idea. And so now we're in this final 5 of the end in diagonal. It looks like to me it's over, and you have all the divergences line up for this kind of count for now. So this is telling me the SPY could be on the verge of a massive breakdown, which means tech must be on the verge of a massive breakdown, because we already see the Dow is. We see the Russell's going to go down, even if you're going to try to play that bounce later. The triple Qs, this is going to end any moment, and we'll be back at 331 before you can blink. And then the market will need to figure out where it's going from there. Now, but I just love shorting this. It's just gift. So I don't know who's pumping it, but it's just gift. I'm just shorting. Now's the time in my I'm using this as an opportunity to short into stupid euphoria, into stupid greed, which was this morning, and just it's just so silly. Like there's no reason for tech to be this bullish, especially with all the economic data coming out. One of the things I wanted to study a little bit more was what happened in the triple Qs back in the dot-com bubble. So there's so much talk about the dot-com bubble these days. So what happened here to end its connector right here, August 28th? What happened to cause this calamity? You go, it's not 9/11. This is 2000, right? So August 2000. Well, what's this for, curiosity's sake? What was Nvidia trading at back then? Just to remind people, where was Nvidia in August 2000? Where were we trading? Where were we trading? Where were we trading? Up here. Up here. Okay. We made a new high, but similar, not the same pattern, but similar, and then we kind of gave it up. The nasty thing about this is it went up, and then it still ended up going low. So Nvidia is going to be a wild roller coaster in the next several years. It is not going to just go to the moon straight up. It's got to do some kind of fractal like you're seeing here with a lot of volatility, massive moves. But beside the point, so if we go back to the triple Qs, go back to this time period, we're going to go back in time. We're going to look at this. I did some digging. Apple pre-released an earnings miss warning. It read, an article I read said the stock traded lower that day, down somewhere close to double digits. And let's go back to Apple and see what happened to Apple when it produced its earnings warning, a Q3 earnings warning that it was going to miss its numbers. And not by much when I looked at it. It was a small miss, but it was a miss. It wasn't like a huge miss. It was, maybe 10% miss around there, if I remember the article right. And so if we come back here, let's go back to what happened. What happened to Apple? Oh my gosh, look at that candle. This is the weekly candle. $1, 50%. It almost dropped 50% in 1 week on that warning. And it was a small miss. Okay, now think about where we are with technology right now. What is going to cause this connector to end? I believe it's going to be the same thing that caused it to end in 2000. Earnings warning, earnings miss, recession. When the large cap tech finally get hit with the recession that a lot of companies are seeing already, when they don't meet their numbers, they miss, then all hell will break loose in this market like it did in 2000. So will it be Q3? Right now let's see, January, February, March, April, May, June. We're in Q2. So could it be, as Q2 comes to an end into July, we get earnings warnings end of June, and the Q2 ends at the end of June, so early July, and then so think about the Dallas Fed, the slowdown in the economy. Do you really think a lot of these big tech are going to make their numbers? They might. My guess is there's going to be earnings disappointment on the horizon, and when it does, Apple back in 2000 got 50% drop in 2 days, or sorry, 2 weeks, a week. We won't see 50, but I bet we'd see 25% in a couple weeks. And if quarter of the market is force 5 stocks dropping 25%, do the math. So that's something everyone needs to think about and consider going into the summer. As rates go up, the consumers getting hit, economic activity is clearly slowing down, oil is dropping, the metals and miners, copper's dropping. You got all this weakness. Trust me, they're not immune to an economic downturn. So when it shows up in their numbers, I think that's when there'll be lights out. But man, it can be lights out in a catastrophic way that people just don't understand, because no one traded back in August 2000 when all that happened. And there were multiple earnings. Once Apple fled the way, then everyone else followed suit in the tech world with earnings warnings. That hell, we're actually not on track. So could that happen? I think that's my guess, and I'm speculating. I could be completely wrong. The debt ceiling vote could fail, and all hell would break loose. I mean, I'm just telling you how something similar ended because the same articles I read back in 2000 and the connector wave of the dot-com bubble had the same euphoria and feel as it does right now for us. Bull market is back on, great gains, everyone was happy, it was a good old time to be alive again, and everyone thought things are going to just continue. Things were going to continue. All the articles were saying that. Everything up in this area was like, this was the low. This was the low. And this is a new bull market. That's what you read until, holy crap, we missed earnings. But there were so many people all in, it only took a little bit. It isn't like they blew. Earnings was only missed. Their expectations were only missed by a small margin, but it was enough to cause such a panic in Apple. And again, they all followed suit, and the rest is history. Look at this capitulation. So when this connector wave ends, hang on tight. Another way to know when a connector wave ends is when this kind of line breaks. We're getting there close with the IWM. So as I said, it could be a real kind of gamble, dip buy type thing, but once this trend line breaks, it should be game over. And game over for the market. And the Dow Jones, if it does turn into a bigger sell-off here, which I believe it will, then it's game over for the market. It's already too late. So we'll see what happens with technology. But the other thing I was looking at in technology is, if you look at how we end it here, this kind of straight up vertical, we've seen that before. You saw it here, straight up vertical, massive reversal. You saw it here, straight up vertical, reversal here. So this is kind of not uncommon. You even saw it here, right here. But it doesn't just go up forever. Almost every time it made lower lows after these type of pumps. So this type of straight up move isn't that uncommon. It is outside the Bollinger Band, so intense. Here you had some kind of straight up move here. So that's more than likely you're going to see this come in, consolidate, and then drop back down and come somewhere probably down here. And when it does that, that's probably one of A done. My guess, and then you'll get two. And again, people will be hoping for the, like that, and this two will trap a lot of people, and then three will be unmistakable, and then A will be in, and we'll probably pierce this October low, and then have a hell of a bounce. And then, believe it or not, it goes even lower after that bounce. So I think that's what you can expect in the markets coming up. And if the semiconductors can't make new highs, if it looked like it topped out, and it sure does today, based on what I've seen, I don't know what else could take tech higher. I mean, ad tech, Google isn't going to do it. The XLY isn't going to do it. Discretionary. So I mean, it seems like that's it. It seems like AI hit the sell area, and again, this could be three waves. It could even be a flat now, but the easy money is over. Again, Elliott Wave Sage gave you the low in this here. Go watch my videos. I said this was the bottom and buy, and then it just kept going higher. And now it could be, now it's three waves up. So this three is done. Now there's no guarantee, guys, you're going to get a 4 and a 5. There's no guarantee for a 4 and a 5. All you have is a corrective bounce that's finished. So it can actually go and make new lows. It can break this low at $9 now. So this setup is gone now. If you miss the move on this, it sucks. Now you have to wait for a 4, a 5, and a pullback against 5 to get back in on this. If you see this, then you can buy that for the next leg. Now the easy money, I believe, is over, and we'll see something like this. In the worst case, it's corrective, and you don't get a 4 and a 5, and you just get new lows. So AI, that's what I'm saying. The AI trade may have finally played itself out today. Now Tesla, I'm going with this type of pattern here. Go a little bit, looking for 141, 121 in this A, B, C, and then A, B. It's kind of a flat connector. Keep that in mind. Stick something like that. Seems reasonable, like that. Apple looks like it's topped today with a nice shooting star candle on the daily. If we get that reversal, then I think that's pretty much good to go there. Netflix, I do like the long Netflix. It looks like we're 5 up. Yeah, we didn't erase divergence, so we're still 5 up. That's good. So I'd like to buy that at 353 if I can get it. Now there's a chance this could still be a flat A, B, C, and have it come down to 268. So I'm not going to FOMO in. I mean, I do think this gap is going to fill at 510. Earnings is coming up 17 July. We'll see where it's trading prior to earnings. But I do think, to me, this is going to pull back somewhere around in this area, and then it could have a run, or it's a flat. It's a flat, and if it's a flat, then it should retest this low at 284, something like that. So, but either way, we'll run the new. Even if it's a flat, then that's just a gift for the market for you to take that from the market, because it should make another swing higher. AMD hit the sell area again, like semis, like I said today, and it got a rejection right away. So that should again, 3 waves. We'll see. Can we get 4 and a 5? We'll see. Nvidia shooting star candle. It's really pushing, again, a lot of just FOMO and greed and day trader battles, but I would expect all this gap to fill. And if the fractal is any indication, we should come all the way back down to retest 108. that we saw in the dot-com era, only to go to new highs, to come all the way back down to 120, 120, 108 again, make new highs, and then come down to make new lows around $70 and $60. Now, wouldn't that be something? So keep that in mind. If that's the same thing, but I bet it's going to be just as volatile. And then I like Wolf. It should be pulling back. Hopefully, we can get it a little lower, down in 45. And Google's struggling here. Microsoft kind of looks like that's it for Microsoft. Facebook, there's your 3 and 4. One more, I think one more push higher. Then Disney, no love, grinding lower. And just looking for different opportunities if something catches my eye here. Vuzi did make this double swing up here, 3, so that could be done right there. And then speculative trade, BBAI could pump with a Russell bounce, but highly speculative. But as you know, you got to risk to get the reward if you so inclined to do it. Plug, again, a Russell stock. I think is still in 2 of some kind. First Solar got nasty rejection here, and then Enphase, as you know, it's taken another swing higher in 2, and then RK could not break this high, so still bearish. RK still bearish. PDD starting to get some rejection. I said careful there until the KWeb gets down into this area, and it's still making its way down there. NEO still making its way down to 699. That's pretty good target area, somewhere right around there. XPV is also making its way down to 450. So I just kind of flipped through technology so you guys can see that. I'm going to end this video, and I'm just going to say the market is very dangerous. And, I was looking at the futures. If you look here, I mean, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. I mean, I don't know about you, but it seems like, this count seems pretty straightforward that it should be pulling back here. And we'll see what happens. But I do not like what I'm seeing, because I'm seeing other things breaking down. And yeah, the Hang Seng continues to drop lower. It's still going lower. So eventually everything else is going to follow suit. We saw this in February 2020, early breakdowns, and then the indices came with it later. And then even when we pulled back in early March, the waterfall sell-off didn't start until oil broke its pivot. And oil has not broken the pivot yet, but I do think it could be on its way to breaking 64. And when it does, I do believe you could get a waterfall sell-off to 50 in oil and potentially lower. And that more than likely will coincide with panic, deflationary selling across all the indices. And we'll see if gold can hold up during that, or it succumbs to the bearish panic in the market. But that's kind of what I'm thinking we're going to see soon. And it still could be choppy. This could still be a connector. We could still be into, but it just seems with the strong momentum I saw today, this too is more than likely set. All right, that's all I've got.